What is going on, team, and welcome back to another video. In this video, I'm going to teach you how to get a higher win rate in your trading. Now, this is specifically for ICT traders, because I promise you one of the reasons why people cannot find a high win rate is because of their stop loss placement. So in this video, I'm going to teach you exactly what I look for when I look for a place to place my stop loss, because really stop loss placement is way more important than you might think. So let's get right into it. Okay, so the things that we're going to go over will be anticipating breakaway gap, Conmen encroachment of fair gap, Conmen encroachment of wicks, mean threshold of order block, intermediate term highs and intermediate term lows, and swing lows below the previous swing low that swept liquidity, or swing highs above the previous high that swept liquidity. So what we're going to do now is that we're going to jump on some charts, and I'm going to show you a live example of an actual chart so you understand what I'm talking about. So the first thing that we're going to be looking at is breakaway gaps, right? What is breakaway gaps? Well, all a breakaway gap really is that it is a completely normal fair gap that just never get traded back into, right? So that is a perfect place to place your stop loss. The problem is not a lot of people know how to anticipate breakaway gaps. We have a great example of a breakaway gap here, where we on a 1 minute chart have a bigger fair gap here, which obviously it's not a breakaway gap, right? Because we traded into this, we rebalanced towards this gap and hit it before price rallied higher, right? Now this, however, is a breakaway gap. This smaller one down here never got traded back into, right? So this is a breakaway gap. Now, how do we anticipate this? Well, in this case, I would anticipate this to become a breakaway gap because we have this bigger gap right above it. We have bullish displacement, and we have violated these bearish gaps out here, right? So when we get such big displacement like this, and there is a bigger gap above a smaller one, it doesn't have to be small, but in this case it is, and we have a lot of bullish displacement, I could anticipate this to become a breakaway gap, right? So my stop loss could be that breakaway gap, because if price comes down here, then maybe I don't want to be in the trade anymore, right? Because if it violates this gap, the chances that it is going to violate the next one is fairly big, right? And that is how we anticipate breakaway gaps. I use these as my stop losses all the time. You just have to find a fair gap that ideally you would like to see stay open to confirm whatever bias you have, right? So in this case, if my drawn liquidity is higher, right, I would want to see the first gap hold and send us higher immediately. I don't want to see us trade through this, go down and hit this, and then do whatever we need to do, right? I want to see us have an immediate reaction off the first one. That is why I have my entry there. And I really don't want us to come back down here, right? That is why I place my stop there. So that is the first really example of where to place your stop loss, is to anticipate breakaway gaps before they happen, right? Because you don't know that price will never rebalance towards this gap. And yeah, that was basically the breakaway gap. We see them all the time. There's one right here. Breakaway gaps are everywhere. It's just about, anticipating where and when they will form. So the next thing is going to be the Conmen encroachment of fair value gaps. And basically what the Conmen encroachment of anything is, it is the middle point of whatever PD array you're talking about. So in this case, the middle point of this gap is called the Conmen encroachment. So you can use that as your stop loss, right? So let's say I entered off of this. My stop could be the Conmen encroachment of this gap. Maybe I'm not confident that this is going to be a breakaway gap, so I still give price some sort of chance to hit this gap and then reverse by putting my stop at the middle point of this fair value gap, right? An easy way to mark this out is just to go into settings here, go into style, and then enable that middle line, right? That is the middle point of the fair value gap, and that is a very, very valid place to place your stop loss. Also, before we get further into this video, I just want to quickly explain to you how dumb it is to use 5-tick stop losses. I know you see a lot of social media traders trade with 2-pip, 5-pip, 6-pip stop losses, or 10-tick, 5-tick stop losses, and then go for a 14 RR, and it's just unrealistic, okay? Give your trade some room to breathe, okay? Even ICT says this, right? Sometimes you can be wrong, right? Your idea can be wrong, but you can still make money because you have a larger stop. So don't try to go for crazy RR, right? 1 to 2 RR just fine, right? 1 to 1.5 is even fine. So give your trades more breathing room. Allow the market to do what it needs to do before it goes in your direction, right? You're not just going to get filled and then price rallies towards CP, right? That happens sometimes. But a lot of the time, price wants to, rebalance or do whatever it needs to do. And Therefore, it's a good idea to have a larger stop, right? You're not going to look amazing on social media because you're not hitting 14 RR trades, but in reality, all the people that you think are hitting these 10 RR, 14 RR trades, they're not, right? Anyone can pull out a P&L tool on TradingView and make it a 14 RR trade, right? I can also post this to my social media if I want it, right? This is what they do. They do it like this, and then they upload it to Instagram. Oh, look at this. Like, don't fall for it, okay? It's going to mess up your head, okay? Give your stops, breathing room. And just how I could use the Conmen Encroachment or the middle point of a Breakaway Gap, that is also very valid for wicks, right? These larger wicks, the middle point of that is a very valid spot to place your stop, right? You see ICT doing this all the time. So in this case, this was a trade that I took moments ago. This was my entry, and because I wasn't comfortable with putting my stop here, I will put my stop at the middle point of this larger wick, which is right here. Also see this order block here, so I also give my trade time to, hit this order block and do what it needs to do with that before moving higher. How do you measure this? Well, you can actually just use the rectangle tool, put the middle line, like I just showed you before, and then that is going to be the Conmen Encroachment of that wick. Now you will see ICT doing this all the time. Look at this right here, actually. Very precise, right? So it is also a known point for reversal. So it's also a very, very good spot to place your take profit, but also your stop losses if you're not comfortable placing it at the low. I would only do this on larger wicks though, like this one, and this one, and this one. Wicks like this, okay? Another great stop to place your stop loss is the mean threshold of an order block, right? So in this case, we have an order block right here, and the mean threshold of an order block is actually just the middle point of that order block, right? So from the high to the low of the order block, find the middle point of there, and that is the mean threshold. Now, don't ask me why ICT didn't just name this the Conmen Encroachment of an order block. I don't know. It's called a mean threshold for some reason. But just the middle point of an order block like this is also very valid. So say you entered off of this gap, right? Your stop could go to the mean threshold of this order block right there. I don't think people realize how often ICT uses the Conmen Encroachment or the mean threshold of an order block or a Breakaway Gap or a wick as his stop loss placement and take profit placement. What did I mean by a swing low below the previous swing low that took out liquidity? A perfect example would be right here, right? Say you long this inversion Breakaway Gap, which is what I showed you before. This is what I longed. This would be a very, very, very valid stop loss placement too, right? We have a low here that got taken out by this low, and then we sweep the liquidity of that low, and that is where our stop loss goes. We have a low here that swept liquidity. Now we want to wait until that low gets swept, and then our stop loss goes below the low of the previous low that swept liquidity. So a 3 low pattern, you need 3 lows for this to form. You have the low, which is our liquidity. Then you have the low that took out that liquidity. And then you have the new low that took out the liquidity beneath the low that took out liquidity. Right? It sounds complicated. It's really not. It just looks like this. But again, I did not put my stop here because I wasn't satisfied with the RR that it would give me. So I just used the Conmen Encroachment of that wick as my stop loss placement. Keep in mind that the places in which I'm telling you to place your stop loss is also a very valid point to take your profits. Now, the last and probably most important point that I will make in this video is what we call intermediate term lows and intermediate term highs. All that really is that we have a swing low that fills an imbalance. So right here on the 3-minute chart, we have a swing low that filled this imbalance, right? This imbalance got filled by this wick. Now this right here becomes a 3-minute intermediate term low. These are some of the best spots to place your stop loss, in my opinion, but it has to fill the entire gap like it did here. And this is also extremely good to trail your stop. And this is exactly what I did here, right? Again, my stop was the Conmen Encroachment of this wick. So my original stop was here. And as soon as we form this intermediate term low, I will trail my stop to that low. Because if we are truly bullish and my idea is right, this low will not break. Again, great for trailing stops too, because that can happen along the way in your trade, right? Say that this wick did this and you wanted it to move higher, then that low would be a great place to trail your stop too, right? And ICT does this too. Another great example would be right here. We have this small imbalance here. Then this is the candle that fills out that gap, right? So say I short when this candle closes, my stop could go there, right? Maybe I short this order block here, my stop could go there. Again, because it is a swing high that filled an imbalance. That is what we call an intermediate term high. When it is a low, intermediate term low, okay? And if your idea is correct, that high or low should ideally hold. So this is the best spot to place your stop loss, but the other options that I gave you in this video are also great. And a lot of the time, people get their stop loss wrong. One, which is 90% of the time, their stop loss is just way too small. Another one is that they don't know where to place their stops, so they end up being liquidity. So many ICT traders claim that, oh, you were my liquidity, but in reality, they're just everyone's liquidity, right? So knowing where to place your stop is very, very essential, right? It's so important, and people just don't really study it for some reason. But this video was basically me going over exactly what I look for when I look for a place to place my stop loss. And this is probably one of the most important videos that I have made, and I tried to keep it as short and simple as possible. I could show you way more examples, but I really don't believe that you need it. So I hope you enjoyed, and I hope you learned, where to place your stop next, because so many people just get it wrong. So yeah, that was it for this video. I hope you enjoyed, and I will see you in my next one.